I'm Michael Fox, and this is the Prospector podcast. And I have joining me good friend Peter Krauth, the silver stock investor. Welcome, Peter.
Mike, thanks for having me. It's always fun chatting.
Yeah, we haven't done this for a while, and I'm glad we were able to do this so now because we have a lot to talk about. The last 2 weeks, silver has taken off like a scalded cat. And that would be a good time to review all of that.
I agree. Yes, it's been very exciting in the silver markets, and I guess I would say something that us quote unquote silver bugs have been waiting for some time, and quite meaningful in terms of the developments overall.
Yeah, it's I was in Quebec City 2 weeks ago for the investment conference, and all of a sudden I'm looking at my silver stocks and they're all shooting up, and then I look at the silver price and same thing. So what happened 2 weeks ago, and all of a sudden everybody decided that silver was the go-to?
It's always hard to really kind of put your finger on it. I think that there are a few things. We've talked before about things like the gold silver ratio. I think that to some extent is one of them. I think the fact that it's almost, to me, it reminds me, well, I suppose it is technical analysis to some extent, right? And I'm a believer to some extent in technical analysis, and in some ways feel that the value or the influence of technical analysis, if nothing else, is the fact that so many people actually follow it. And so it becomes almost a predictor, right, of where things can head. And so I think to some extent the gold silver ratio is that as well. It had been well above 100 for some time, and there was increasing talk about how the ratio was going to come down and should come down, and start heading towards sort of more of a historical average, even if we look more towards only the last few decades as opposed to the last 50 or 60 years where it was even lower. But I think one of the things that happened was the market got wind that inflation was not going to, be contained, so to speak, by the Fed and other central banks. Longer term rates started to head higher. And, if you look at the kinds of things that the Fed themselves, for example, watch, which is core personal consumption expenditure, or core PCE, I've got a chart in front of me that shows how, like in the first quarter of 2025, we went from very, very quickly, had a very rapid tick up from somewhere around, I'm going to say maybe 2.75% to about 3.75%, matter of a few months. So that's a long way, even where it started, let's say, in January or so at 2.5 or 2.75%, that was already pretty high above the Fed's target of 2%. And now we're closer to 3.5. So well above the Fed's target. And then you have Q1 GDP with negative growth in the US. And as we know, 2 quarters of negative growth is the definition of a recession. I don't know that we're going to get a second quarter, this quarter being again negative growth, but it certainly does not bode well. We know that the tariffs had a big impact on that kind of outcome. I think that it's a combination of things. The market, here's kind of my take. I think that gold, what we've seen in the last few weeks with gold kind of consolidating and maybe paring back a little bit, I actually think there's probably a little more of that ahead, was gold pricing in a lot of what we saw coming. We're talking about the impact of the tariffs in the US. We're talking about geopolitical, pressures, and gold was pricing a lot of that in, and perhaps got a little bit ahead of itself. Silver tends to follow gold, and silver is starting to do that typical catching up that it does. And if you look at the gold silver ratio, which we talked about a few moments ago, gold's now say, small correction or consolidation, and silver's push higher has helped to do these two things. So move the ratio down in the gold silver ratio and lag gold by starting to outperform gold a little bit to the upside. And I think that the overall economics and geopolitical drivers are what have led to that. And then we can certainly talk about there's some fundamental drivers as well. But I think overall these are the kinds of things that have come together to push silver higher.
What I found interesting about this particular move is it's almost a counter cycle move in that traditionally silver and gold both, although as you mentioned, gold is kind of consolidating at the moment and back in a range bound area, but typically as you head through April into May, these metals tend to start to have a seasonal downward bias. And for silver to take off in the nature that it's taken off at the early part of June is definitely counter to that seasonal bias. Again, is this a positive sign, or is this just one of those things? It is what it is.
Well, I think it is a positive sign. It's certainly bucking its average, the trend that it has shown, let's say over, I'm going to say probably as much as 40, 50 years of average behavior, like throughout the year in terms of seasonality. You're absolutely right. And I'm looking at a chart now that shows that it typically tends to peak in April, sort of late April, and tends to trend downward until about the end of June or early July. And it has completely bucked that trend in the last few weeks. I think that is very a positive. We mentioned it before. It's going against the direction that gold is going, and this chart that I look at, the seasonality chart, tells you how silver behaves on a month by month basis as well, which months are positive, which are negative on average. And June's the worst month typically. It's got the biggest drawdown in the silver price, and here we are with silver pushing higher. I will say this, that I look at all kinds of things all the time. I want as many inputs as I can to formulate an idea of where I think we're going in the near term, the medium term, and the long term. And one bit of information I came across a few days ago looks at silver futures and the positioning by speculators. So speculators are considered the dumb money, and the hedgers are considered the smart money. And this particular data looked at the speculators, and the speculators were at, I'm going to say, almost an all-time high on their long contracts, and almost a long time low on their short contracts, meaning that they were vastly net long, and it being dumb money suggested that there was little room for silver to move higher. And this data comes from the end of last week. It was published, I believe, on Friday of last week. So we're a week into it. And here we are with a smallish correction that has already started in silver. So what I will say is that some of your maybe silver bug listeners may not really want to hear this, but I'm going to just call it as I see it. And I think that, and that's what I've told my subscribers actually just yesterday, I said that I think that we could be due over the next few weeks at least for maybe a slightly more meaningful correction in both gold and silver. Maybe, in fact, a little bit more so in silver because it has not corrected like gold has so far. But I think that will be short-lived, and it will be a great buying opportunity. And I don't think it'll last more than a matter of a few more weeks. But overall, if you look at the other drivers, which we talked about before, and how the stocks are reacting, and some anecdotal stuff that comes from some of the silver juniors, which I could certainly detail a little bit. The silver juniors have just been on fire, like you mentioned, and they've certainly finally been leveraging the gains in silver as well. And if you look at something like the SIL ETF, which is not for your listeners is not a pure silver ETF, and that's because of the ETF's mandate, and they had need certain market caps and liquidity issues with some of the stocks in there. You have some gold producers, etc., and you have some non-primary or non-overwhelmingly silver producers in there, and yet it has been dramatically leveraging the silver price, and I think it's over the past maybe 15 months or 16 months, it's up about 95%. So, and that's just tremendous. And if you look at an SIL to silver ratio, again, kind of a proxy for silver stocks versus the silver price, we've seen that really shoot up as well. And so that tells us quite clearly that the silver stocks are starting to significantly outpace the silver price and delivering the leverage that we're used to and that we own them for.
Yeah, it's one of the observations I had made when this all kind of started. Again, while I was in Quebec City, most of my silver stocks started to shoot up. And the silver stocks that I hold a lot of them are Mexican based because Mexico being a large silver producing country. But there's permitting issues in Mexico. So my first thought when this started was, oh, somebody's gotten some permits and I missed the press release. So I started scouring Mexican press releases to see who got their permit. And I was surprised that they were getting repriced because of a shot in the arm to the actual silver markets. So I found it really quite interesting that they're getting, a lot of the silver companies are getting repriced based on this move in silver this time. And in the case of my Mexican stocks, they're still, they still haven't flexed their muscle once permitting starts in Mexico, giving, even more opportunity there.
I completely agree. It's been, and as we were chatting before we got started, one of the companies that I follow closely is Kootenay Silver, and just 3 days ago they delivered their maiden resource on their flagship, which is the Columba project, and we're talking about 54 million ounces at 284 grams per ton. It's almost all silver, which is also a rarity in silver deposits. And the stock's reaction is that in the past few days, it's up. I'm going to say somewhere around maybe 25 or so percent. In the last month, it's up about 45%. And interestingly, and I'd say significantly, they on the back of that maiden resource, they announced a financing. Well, the financing was nearly 3 times oversubscribed, and so they went for the overallotment option, and the financing went from sort of 12 million to 17 million, probably within a matter of a few hours. And after the financing announcement, the stock continued to climb, which is something you also typically don't see because of the dilution factor, and we're seeing it climb again today as we speak. So I think it speaks to a few things. It certainly speaks, in my view, to the quality of their maiden resource, but it speaks to, and this is on a day when silver is down a little bit, that we've seen a few days of maybe 2 or 3 days of slightly slight consolidation in silver and in gold. And yet there's excitement, and the I'm going to say perhaps to some extent the nicer, better quality projects are getting recognized, and this is Mexico, like you mentioned. So the whole sort of permitting issue is not resolved. This project in particular would be underground, so that's sort of a lower risk. But overall, still there is a bit of an overhang, and yet these stocks are moving. So it's what can I say? It seems like silver is coming into its own, and it's doing what it usually does, which is again lag gold and then start to really catch up. And the performance in some of these stocks can just be sort of breathtaking. And I think we're going to see a lot more of that over the next several quarters and years. It seems to be silver's time.
And let's talk about the gold silver ratio. It's one of those things that it's out there. It doesn't matter, except that it does matter because people believe that it matters. But it did hit 100, which is extraordinarily high, meaning that it would take 100 ounces of silver to buy 1 ounce of gold. It has come back, but traditionally it's been somewhere in the neighborhood of 50, if I'm
Yeah,
remembering my ratios correctly.
yeah,
But
that's about right.
in the last several decades, last 10, 15 years, 70, 75 has been more the range.
Hmm.
With gold heading towards 4,000 or 4,200, if you believe the analysts that are looking at the gold prices. That would pull silver up to even at the 75-to-1 ratio, that would pull silver up to around 75, $80,
Hmm.
which is a considerably higher level than the $50 record that's it's hit twice over the last over its existence, and each time it was there for about a blink of an eye and then it was gone again. So the question I have is for you is, where do you see silver going? As I say, I mentioned I figure 75, $80. Where do you see it going? And given that, 50's been the ceiling, how many times do you think we're going to have to punch at that ceiling before it breaks out towards these highs?
So, for the first part of your question, in terms of how high do I see it going, I think, the 70 to $80 range is quite realistic. My target for the second half of this year is going to be, I'd say, in my view at least, conservatively around $40. I think we're going to reach that $50 target next year at some point. And I agree that gold is heading well beyond 3,500 and is sailing towards 4,000. And if you do the math of silver, let's say around the 70-ish ratio, 70-to-1, you're looking easily at around 60. I'm going to actually refer to some work of a colleague that I hold in high esteem, and that is Jordan Roy Byrne, who does some fantastic, in my view, some fantastic technical analysis. And he comes out with these charts where he looks at the average prior silver bulls. He's done a few things. He's looked at how silver behaves when gold starts to reach an all-time high, and then over the next, say, 12 to 18 months, what happens with silver. So one of these, as far as I'm concerned, as I say, an exceptionally good chart, shows you that if you take the prior four silver bull analogs and you project outwards, they would have lasted somewhere around, I'm going to say, maybe 18 to 24 months. And that's not to say that, silver is going to crash after, but that's sort of, if you look at a rough bottom and then a rough top, that's kind of what you're looking at, say 18, 24 months. Well, the average of the last four silver bulls, if you took what I would say would be February of last year, when you could argue silver bottomed, I think it was around maybe 18 or $20. That projects out on average to well above $80 within, let's say, so those 2 years. So we'd be looking at potentially sometime next year. So that's more aggressive than my target of $50. But we're talking about the average. We're only, if we look at where we are right now, we're about halfway through the average of those silver bulls. And so we're kind of closing in perhaps on that $40. What they suggest is that we could easily double from here within another 12 months. And so that's my answer to the first part. There's one last thing I would say is that my ultimate target in this secular silver bull, so we could be talking about, maybe another 4, 5, 6 years out, is that silver is going to potentially reach in some kind of a mania phase somewhere around $300. And, I put my book out 3 years ago, The Great Silver Bull. I talk about that in there, that target of $300. And I give multiple examples and I guess I'd say justifications, if you want, or support for how and why I got to that number. And I use different indicators, and they all ended up pointing to $300. And of course, you have to make assumptions because these are based on certain assumptions. But if I used $5,000 gold, which sounded crazy at $1,500, but now at $3,500 or $3,200 doesn't sound anywhere nearly as crazy anymore. So that's my sort of conservative target still for gold. If you used a $5,000 gold target and you used the bottom of the ratio low when silver reached $50 back in 1980 versus gold, that ratio went below 15. I think it was around 14. But if we use 15 on a $5,000 gold price, we're looking at $333 silver. So, I said I'm not going to be that specific. $300 is a good, easy enough round number. The markets tend to like these psychological milestones, these big round numbers. And like I say, there were several other indicators that I looked at. Everything pointed to somewhere in the, I'm going to say 280 to 330-ish dollar range. So I went with 300, and I still think that, when we get to this mania phase, that it's going to be quite achievable. And frankly, since I came out with this $300 target, I've seen what I consider to be credible analysts come up with $500 targets. So I don't feel like I sound so crazy anymore. So that's as far as targets go. The second part of your question was if we, are going to get through this $50 target, which I absolutely believe we will we have to bounce up against it? That's a tough one. It's a tough one, but if I guess my gut tells me that probably it's been if you look at this $50 peak, it's considered amongst asset classes as probably the or one of the most historic technical breakouts, price breakouts of all time. And that's strictly because it will, once it breaks through the 50, meaningfully and holds it, it will have been one of the assets that will have taken the longest to overtake a prior long-term high. And that's why it's going to be so meaningful. And because it's such a big target to take out in that sense, my gut tells me that it won't do it on the first try. However, once it does do it, I think that, and that could take a while, maybe it's days, maybe it's weeks, maybe more. Once it does it in a meaningful, sustained way, I think that, we could easily sail higher to that $70, $80 target that we talked about earlier, which would be, the average of prior silver bulls. So that's where I think things are headed.
Yeah, I'd be in agreement with that. If I take a look at the gold and its all-time high before for now, it was 2000, and as we approach 2000, about a year and a half ago, it took several, you know, punches at the ceiling to get through that $2,000 level and stay above it. Once it did, it ran. We're talking, PDAC of 2024 when it kind of took off and jumped to where it is today. But it bounced off that $2,000 level several times. The other challenge that silver has, and everyone refers to it as the devil's metal because it never really behaves as a market the way people think it should, because it's a large part of it's industrial and a smaller part of it is precious metal. And on the industrial side of things, if the price starts to get too high, the demand will start to waver on it as they find other metals that'll be cheaper to put into manufacturing than silver is. And how much of a suppressant do you think that could be to future growth beyond, beyond that $50 level? Because I'm not disagreeing that we're heading to new highs here, but how much of a headwind is that industrial element to silver going to come into play?
So I agree with that. That is a headwind for silver because these that what that means is that companies that consume the silver to put it into products are going to have a hard time absorbing significant price increases. So they're going to pass them on. And by passing them on, it makes their product more expensive. And so they will absolutely look for ways to either thrift, use less silver, or replace the silver. So that's a very, very interesting dilemma, frankly, because silver has become, I'm going to say, uh, indispensable and even irreplaceable, frankly, probably in many applications. That can be a headwind, of course, because if the silver price goes up, your inputs go up, your overall production cost goes up for whatever you're manufacturing. What I'm going to say sort of counters that, maybe to some extent, is that in many, not all, but in many applications, the amount of silver that's required in a given product, electronics typically, for example, is not huge necessarily. And so it becomes, if it's a very, a small percent, let's say, of the overall cost of that product, then even a significant, let's say even potentially a double, just for argument's sake, if you were to double the silver price, but it only represents 1 or 2% of your overall cost, then you may have an easier time absorbing it. You may have an easier time cutting somewhere else in your inputs for your product. You may have an easier time passing on a slightly higher cost. But it's true also that silver has become very, very key to, its single biggest industrial use now by far is solar panels. And that's a really interesting aspect of it because if my memory serves me right, it's somewhere, I believe, around maybe 20% of the cost of a solar panel. So certainly what you would call significant. The industry has managed to lower or to manage to improve thrifting and cut the amount of silver over time. There are limits to that. I've seen multiple times different ways that technology has looked to either lessen or replace silver. One of the ones I've seen is copper potentially for solar panels, and apparently that's getting some support by a couple of governments. I have, however, not seen any kind of realistic potential with that. There are two reasons for it. One is that it's considerably less efficient than silver. And two is that it corrodes a lot more quickly. And so you put all this effort in to produce a solar panel, and then perhaps it lasts you 8 or 10 years instead of more like maybe 20 years. So you've got less efficiency, you've got earlier replacement. So there are a lot of factors to consider, but I do agree that it can become a headwind. And so, markets, like they say, are self-correcting. If the silver price gets too high for the amount of silver that's used in industry, then an industry looks for ways to lessen, or people buy those products less because of the silver inputs, which frankly would still be difficult because it is so ubiquitous. I mean, it really is. I like to say silver's almost always less than about a meter away from you, whether it's your phone, your laptop, your tablet, your keyboard on your computer. It's just such a tremendous material for electronics, for on-off switches. It's just highest conductivity, highest reflectivity, and so it is hard to replace. But like I say, the markets are self-correcting. We could see, if silver got too expensive, and I don't know, I'm just going to pick numbers. Let's say that's 50, 60, $70. Maybe that'll get, the silver price to correct back down for a while until adjustments are made, or people start to accept that they have to pay more for some of those products. And then perhaps the silver price can resume its climb. But I do think that it's so cheap on so many metrics compared to where it's been and compared to other metals, especially when you consider just how practical this metal is. It really is an all-purpose metal. And then, we haven't even talked about the investment demand side, because here's how I see silver. I like to say that it's the industrial demand, that ongoing demand that provides a rising, sort of a steady rising floor under the silver price. But it's when the investment demand comes in, and often will come in, it's the wild card. It'll come in very, very quickly and overtake, expectations. We saw that in 2020. In some places, people were paying 75, 100% premiums over the spot price for silver to get their hands on some silver bars or silver coins. Unheard of. This is something you basically never see. It took probably a matter of a couple of years for these premiums to start to dissipate. So if the investment demand comes in, that could just knock, the impact or the demands of the industrial side right off, off the charts, and say, to hell with all of that. Silver price is going higher, and I'm not saying it would be sustained, but it could really just pull it dramatically higher very quickly. That's really the kind of effect you can have, from big demand. And gold, I'd say, call it 3,500, 4,000, starts to look really, really expensive when you get 1 ounce for that price, and when you get 1 ounce of silver for, at that point, what might be, say, 50 or 60 or $70. So, it's relative, and I could certainly see the market being overwhelmed, and investment man just really pushing the price up quite dramatically.
Well, if we look back to the conversations we were having a year ago, we were talking about waiting for Godot, and finally, it looks like you might have actually shown up. So this is a good thing. You have a new product to offer listeners if they want to get a better grip on the silver market.
I do. So, just sort of quickly, I started at the beginning of this year a new letter, which is a free letter for subscribers. It's called Silver Advisor. And what I do there is follow companies essentially what I do is I follow all their material news, all their material press releases. I review, summarize, and comment on that news, and I put out my comments typically the very same day as that press release comes out for the company. So we have a handful of companies in there already. It started back in January. I've been adding quite steadily. I'm going to say almost on call it on a 3-4 week basis. A new company has been added. We're up to 8 already in that service. And I'm really quite happy to say that the timing was pretty good. If you look at the average return, and this, remember, is with companies having been, maybe 4 companies were added in the last couple of months. We've still managed, or up until a few days ago, at least, when silver started to pull back a little bit, we're at 40% gain across these 8 companies. Again, starting in January, and with several having been added. One of them actually was up within 15 days. The stock price had doubled. I've never had that. I've never experienced that myself. And I told subscribers that they should probably look to take some profits on that. And sure enough, it paired back almost immediately after. So that's one thing that people can use as this new service. It's free as an introduction to follow silver stocks. And if they want to subscribe to that, they can go to thegoldadvisor.com /subscriptions, and they'll see the option there to subscribe to that. And then I've got my paid letter, which is a Silver Stock Investor.
Wonderful. Thanks very much for your time, Peter. And we're going to be doing a lot more of this as silver continues to move the way that it's moving.
I thank you for your time, Mike. It's always fun, and I certainly look forward to the next chat.
Yes, maybe we can get Godot to sit down with us.
That would be fun.
Okay, thanks, Peter.
Thank you.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.